Hello, Oracles. Well, Tesla stock continues to fall. Just as I had been talking about in the charts, we'll take a look at those today to show this dead cat bounce that we're on, the levels that we're looking at, what levels we could be falling down to, when we could be falling down to those levels. We'll take a look at all of that. And if you guys have been following me on here, you kind of understand where we're going to be headed from here. But again, we'll take a look at this again today. All right, so yesterday we were down about 2.8% on the day. We did test that level at 300. That's what I was talking about on my previous video and in the live stream, that I thought we were going to come up and test this $300 level again. And then if we broke through, we could go up. But just looking at the charts and how the trend is that we're on, I had a feeling we were going to test that and then bounce down. And look at that, almost exactly at $300, bounced right off and came back down and closed down just under 3%. So right below us here, we have this gap at 255. That there, I think, is what the next thing is that we're going to fill. So again, right now, when we're looking at the extreme fear index, we are still in extreme fear. And we did get that rebound on Friday thinking that, hey, maybe we are going to actually be going up from here. Maybe that extreme fear was the bottom and we're going to bounce up. And we did to start the day on Monday and then sold off quickly from there. So looking at that sell-off, and a lot of that came from President Trump acknowledging the fact that we are going to be starting tariffs of 25% on Canada and Mexico starting on March 4th, which is today. So looking at that, that definitely spooked the market, getting that confirmation again. And we're looking at a negative GDP read potentially coming in at a negative 2.8 versus the original negative 1.5. That's leading us to some potential recessionary areas. So a lot of this fear in the market, is starting to kind of brew in, and Tesla specifically is feeling the brunt of that. So again, we are getting the automotive report coming out this week as well to show us how the entire automotive industry is faring. And again, it's just industry wide looking like it's going to be a difficult year. Troy Teslake is still looking at the fact that we are probably going to be negative when it comes to year over year growth when it comes to deliveries. So, based upon all that information, again, I said it when it happened. A lot of this push up to that 480 mark was a lot of just enthusiasm and sentiment coming from the election. We got all that, and we're now just clearing it all out. We do have this gap up to 394, another little gap up to 450. Over time, we'll fill those, very similar to where we had gaps up at that $290 level before we ended up coming up to these levels here. So we had that gap at 290, and then post-election, we ended up filling that. I think in the future, obviously, we're going to come up and fill these gaps. But before we fill these gaps up here, we need to fill the ones down below just based upon where we're at with the sentiment and just where the company is at intrinsically. So again, now the PE ratio is starting to thin out, but we're still in triple digits when it comes to the PE ratio. So that they're coming down kind of back to earth is going to be normal. So filling this gap here at 255 is going to signal, all right, all of the enthusiasm that we got from the election is now wiped out and we're back to square one at that point. But then we still have the enthusiasm that comes down to 218 here, and that enthusiasm was based around the Model Q. So timing of it, I think, in short order, probably within the next month, we'll end up filling this gap at 255. Could end up being a thing where at the end of the quarter, we get the Q1 numbers coming in and we get more information about Model Q and where the status is going to be on that. What is the ramp going to look like? What is the actual price tank going to look like? Are we still going to have the EV tax credit by the time we get to the Q1 earnings call? And then that information there could clear us down to this 218 level and get us back to that point where we were at prior to the Q3 earnings. So that's the timing of everything I'm looking at. So 218 could possibly get filled after Q1 earnings. We're looking at some disappointing delivery numbers already coming through. So again, don't know what's going to look like, but it's going to be a challenging year. And again, if we are going to be having a weaker than expected Q1 number when it comes to deliveries, and we still have the EV tax credit, what's going to happen when we lose it? Now, when we get the announcement that it could be going away, we might get some people coming in to take advantage of the EV tax credit before it goes away. However, that you have to counter with all of the political turmoil that has been caused with Elon and everything else that's going on, because it's not just the people who are saying, I don't want to buy it because of Elon. You have people not buying it because of the way others are reacting, and others are going out and damaging people's Teslas. So somebody who's completely unbiased in the entire situation might not want to buy one just because they don't want their vehicle damaged. And that could be another deterrent for people to purchase these vehicles, at least in the near term. Once things settle, I think we'll be fine in the long term. But there's a lot of fresh, emotion going on around out there, and people don't want to buy these vehicles because of that. So I think we're going to end up getting down to these 218 levels, probably Q1 earnings, maybe a little bit after. And then from there, we kind of just see where the macro environment is. Below 218, we do have gaps that come down here to this 147 level. And this is the one I've been talking about where people think I'm insane because we hit 480. And I'm like, we've done it before. So I'm pretty sure we're going to do it again. So looking at this 147 gap, I think this one will end up filling strictly if we end up getting a really bad year over year read when it comes to Tesla's numbers and deliveries and we end up getting a really bad macro environment. I don't think this here at 147 is going to be a Tesla specific number. I think Tesla having just negative sentiment and negative year over year numbers coupled with a bad economy together, I think are going to be what causes a 147. So that's why once we hit 218, I'm going to be following the macro environment and Tesla specifically to see if we end up coming down to break that level. So again, 255 is the first one I'm watching, which I think we're going to fill relatively soon. Then I think we're going to come down and fill this 218 level probably sometime after Q1 earnings. And then from there, I just watch the macro environment in Tesla to see if we come down further. Below 218 will be the $200 level as a psychological level. Do we end up breaking below that? Because you look at here and, it was a nice, steady, gradual growth here. We had this little bit of a bump, clean that out, steady gradual growth, dropped down to clean that out, and then jumped back up to those levels. But the 218 seems relatively realistic to be at right now. And so I'm just going to kind of pay attention to once we get to that level and where we go from there. Now we look at the RSI, and the RSI right now is in the oversold range. So we were in oversold, bumped back out, then dipped back down into it. And we have been known to stay in the oversold and overbought range for a little while. So I don't know if we're going to hang out down here, if we're going to get another rebound, but either way, if we rebound up, I think it's going to be something similar to the fear and greed index, where we've been going from extreme fear to neutral and then back down. I think it could be something very similar where we end up hitting this, RSI comes back up, maybe hits 50 and then comes back down again and just kind of hovers down below and continues selling off. Very similar, I think, to what we saw in 2022. Could be a similar way that we play out this year for Tesla. We're already down a significant chunk from 480 down to 280. That's $200 that we've already wiped out from all-time highs recently. So again, we fell about 70% in 2022, and right now we're down about 41% from all-time highs. So if we're going to be basing it off of 2022, we do still have quite a ways to go before we have to get to that 70% sell-off range, but we are definitely in bear market territory with Tesla currently. And so overall, again, I think the company is going to be awesome long term, but near term, we're just clearing out a lot of the sentiment. And then from here, we're going to see what happens with Q1 earnings, and we're going to see what's going on with the Model Q. Then, of course, FSD coming out in Austin in June is going to play another factor and role in all of this. So, is that actually going to give us some insight as to we are going to be generating revenue from FSD and robotaxis, or is it just going to be the next little small step in the planning for Tesla going forward? Personally, I think it's just going to be a small step going forward. I think it's going to be a great small step. However, it's still just going to be a step. It's not going to be something that's revenue generating yet. We still have time to go on that. That's going to be more like 2026. So in the meantime, the actual earnings that we get in are going to be reflecting all of that. And if Tesla doesn't come through with it, it's just going to be another one of those, well, just keep on kicking this can down the road. We're not there yet. And we keep on saying we're not there yet. And we've been saying that for years now. Once we're there, we're going to be good. But the market right now is kind of playing that little boy who cried wolf. They keep on telling us that they're going to be there and they're not there yet. And we're finally like, all right, then we'll just wait till you're actually there because we keep on showing up expecting you to be there and you're not. So that's kind of my thoughts on how it plays out with Tesla right now. Again, I think long-term perfectly fine. I think 2027 and beyond are going to be absolutely outstanding. I just think that the next 12 to 18 months, based upon Tesla specific and macro environment stuff going on, are just going to be playing a tougher role on Tesla. Again, could give us some more great buying opportunities over the next year and a half, but I don't think we're on any place where we're going to be running yet. I think we do have some time on that. And then once I think 2026, late 2026 and 2027 hit, I think it's going to be game on from there. Obviously, we have a lot to go through between now and then, but I think timing wise, based upon our current information, that's what's going to play out. You guys can let me know your thoughts in the comments on this. Let me know what you think. If you think we're going to be running from here, if you think this is the bottom, or if you think that we're going to continue falling. Thank you guys so much for watching. I appreciate all of your support. Have a great one.